Hey folks, Dan Frio here with your real estate update for January 25th, 2024. We have a lot of economic news to cover today, so let's get to it. What you're seeing right through here is the top 6 programs people use when they're buying their first house. These aren't my rates. These aren't Bank of America rates or Wells Fargo's rates. Whose are they? Well, actually, Mortgage News Daily. They survey lenders all over the country and ask them these 5 questions. The 5 questions are, if you had a first-time home buyer buying a single-family home, it was going to be their primary house. They're going to live there. You might be like, Dan, that's me, so there's my rates. No, that's not your rates. There's 2 more questions that are asked. What's the credit score? Well, these people are 780 credit score, and they're putting down 25%. So is that you? Probably not. So if that's not you, reach out to me at the end of this video. I'll give you all my information. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico, and I'd love to help you maybe try to buy that first house this year, maybe your first investment property, or just talk real estate. So without further ado, let's get over to the economic news that just broke this morning that's really going to be, I think, pleasing to the Federal Reserve. So what you see, the first thing on CNBC headlines, it says right here, Dow climbs 200 points after GDP report shows strong growth but slowing inflation. Isn't that what the Federal Reserve wanted? They don't want, they basically are wanting what they call a soft landing. What a soft landing is right there. It's good growth in the economy and slower inflation, okay? One big piece of this is also unemployment. How many people might lose their jobs. Now, a lot of people are saying, okay, we're going to have a massive recession, and that's going to have everybody losing their jobs and so forth. Is that really the facts behind all this stuff? Well, let's take a deep dive in the economic news that we just posted this morning to really check those items out. So let's get to it. Right through here, this is the economic calendar we have for today. Now, all week, there really hasn't been much data. But the Federal Reserve is actually meeting next week. I don't know if you remember that. They're meeting next week, and they're going to tell us, are they going to pivot and reduce rates? Are they going to hold rates steady? Or are they going to increase rates? Well, let's look at the data that they're going to be looking at this week to make that decision for next week. So let's break it down. So we're going to go piece by piece. Building permits, we're going to get to that in a second. But the big news that the Federal Reserve looks at is they want to see how the economy is growing. Is it growing? Is it stagnant? Is it decreasing? And what is the jobs market doing? So those are the 2 items that we're really going to take a deep dive into. So the first thing that we have right here is continued jobless claims. Well, let's scroll down to here and say, what's the initial jobless claims? Okay, the Federal Reserve, they really want like 300,000 people losing their jobs each week to help cure inflation. They think, well, if everybody loses their job, they can't buy stuff, thus inflation's going to come down. Okay, so that's their thinking. Well, initial jobless claims previously was about 190,000. They expected to uptick a little bit to 200,000 and actually went to 214,000. So that's good news for the Fed. That's bad news for me and you. That's more and more people losing their jobs. Then when you get to continued jobless claims, it's staying up there. So the last reading was 1.8 million. They expected it to increase a little bit to 1.82 million. It actually increased a little bit to 1.83 million. So that means more and more people are staying on unemployment. They just can't find a job. Okay, so that's what's happening with the job market. All right. The next thing is what's happening with durable goods. This is orders for big items like cars and manufacturing things and stuff like that. Look at the reading. The last reading was 5.5. It was expected to drop to 1.1. It came in at 0. That means durable goods orders, everybody stopped ordering. Why? Again, a pullback in the market. How big is this pullback going to be? That's what we're really focused in on, because what's happened over the last 5 times the Fed's been in this position is they increase rates, they increased it so high that they caused a massive recession, and then they had to go in and pivot, start reducing rates because the recession was basically killing the whole economy. You're not going to see that this year because of a lot of data that we have, plus it's also an election year, folks. So they're going to make the numbers look as rosy as they can for the election year. So let's keep going down through here. We have the GDP price index. Now, this is also a component that we're looking at. What's happening with prices? Okay, this is a big number. The GDP price measures the annualized change in prices of all goods and services included in the GDP number. Okay, remember this number's been, well, not too long ago, is at 9. Okay, and then it's come down to 3. We're really looking for this number to come in at 2 or below, coming in at 2 or below. We went from 3.3, was expected to come in at 2.3, came in at 1.5. That's a brutal number, but that's helping us when it comes to mortgage rates. And then what else do we have here? Retail sales, new home sales. You're starting to see new home sales and new home sales in general upticking. It was a weird November, December, January, because rates basically were at 8%, and then all of a sudden in October, November, rates dropped down to about 6.25%, and masses of people jumped into the market. You can see it right through here. Previous number of homes sold, 615,000. And then the last reading for December went up to 664. Usually December, you have a major kind of peel off. You have this number going quite a bit down. So that number is exciting. But we're really going to take a deep dive next into the housing market, because a lot of people are out there saying, okay, we're going to have massive recession, which you're seeing right through here. We don't have those huge job losses. Like you don't have the 300,000 here, and you don't have continued claims rising. So I don't think, I think we're going to really come in with a soft landing, but tomorrow's going to give us a lot of information. We have PCE. This is the number one inflation level or index that the Federal Reserve monitors. We're going to see that number first thing in the morning. So next thing, let's get over to those building permits like we were talking about. Let's take a little bit of a deep dive into those numbers. Here's building permits throughout the U.S., okay? You can see people are saying there's massive inventory. Where is it? Okay, if you look at this chart, we can go to a 10-year chart. Okay, you had some build up here back in 2022, but look how it's dropped. Let's go back to a 10-year chart or a 25-year chart. Look at this. The averages, if you take the average from 2010 to current, if you take this trend, where should the trend line be? Up through here. So we're way down here. We're way below where we should be in buildings. Plus, if you look over here where that massive spike was in the early 2000s, we're basically, I won't say halfway there, but we're only about halfway up this chart. Okay, so those numbers. And then last but not least, the Federal Reserve. What are they going to do next week? So what we monitor on a daily basis is the CME Fed Watch tool. Federal Reserve is meeting in 6 days, 3 hours, and 27 minutes. Okay, what are they going to come up with? What are they going to tell us? Well, I can give you a little bit of a sneak peek. They're not going to change rates. How do I know? Let's look at the data. This website that we're on is what's the likelihood the Federal Reserve will change the federal funds target rate at the next meeting. The current federal funds target rate right now is 5.25 to 5.5. So if you look at this chart right through here, it's telling you that there is an 87% probability that what? Federal Reserve will maintain or keep the federal funds rate at 5.25 to 5.5. There is a 2% chance that they will reduce that. Now, if we look at this over time, if we look at what's the probability of what they're going to do in the future, what's telling us right here, there's a 97% chance they're not going to do anything in January. That's right through here. In March, there's a 50% chance that they're going to stay steady, and there's almost a 50% chance they're going to start cutting rates. And then in May, this is when basically everybody's saying, okay, there's a really good chance that they're going to start cutting rates again between March and May. So this is basically what the Federal Reserve is telling us, that what's going to happen with the federal funds rate, the interest rate that they control. All right, so let's now dive into the bond markets. This is what I see on my screens on a daily basis. Again, I'm a mortgage advisor, so I watch charts on bonds. Why do I watch these things? Well, I'm trying to figure out what in the heck's going on with interest rates. So what do we watch? We watch tea leaves. We check and see what the Federal Reserve does. We check banks every day. No. What we do is we watch a mortgage bond and figure out what it's doing, okay? Because this yield, the yield on this bond is the biggest component of your mortgage rate. So we watch the MBS market right through here. This is a mortgage-backed security. This is the price. All you need to know is this, to make it as simple as I can. If the price is going up, rates are coming down. There's a yin-yang, there's a reverse effect. Okay, if the prices are going down, it means rates are going up. Let's see what it's done over the last, let's say, month. Okay, it's been pretty steady. But if you go back, remember I was saying earlier, back in October, November, rates took a huge drop, and then a lot of people jumped into the housing market. Let's look back at that time. So you go back to end of October, beginning of November, here's where the price was. Remember I was saying as the price goes up, rates come down. So we had rates at 8%, then we had rates go all the way down to 6.5%, and then we had a little bit of an uptick, and that's why you're seeing rates about 6.9 right now. So what this data is telling us today is right through here, it's up 14. Okay, that's good news. Remember I said prices go up, rates come down. Because of the data that we're getting today, GDP is still okay. We have the jobless numbers okay, and we're seeing inflation coming down with all the other cracks in the foundation really not that bad. Well, I think the Federal Reserve might just pull off that soft landing they were saying they were going to be. So that's what we're seeing in rates today, and that is my report. So like I said, my name is Dan Frio. I do this report on a daily basis. My whole goal, folks, is just to make sure you're educated on real estate. I don't know what's going on with house prices, but what I can tell you is I really know the real estate market when it comes to financing. So if you'd like to reach out to me and my team, we'd love to help you. How do you do that? Well, there's 3 ways. One, you can hit the Apply Now button up there. It's going to send you down a platform to answer a few questions for us. Based on your answers to those questions, we're going to assign you to a specialist on my team that can help you out. But if you're like, hey, Dan, can I call in or can I email you? Absolutely. So when you're at the rateupdate.com, scroll down. You're going to see blogs and all kind of other things. You're going to see mortgage calculators. You got to check those out. And then at the bottom down here, you're going to find out our contact information. You can reach us at 844-775-LOAN. It's 844-775-LOAN. Or you can email me at dan@therateupdate.com. Thanks so much for watching, guys. God bless. And if you haven't subscribed to my channel yet, please do so right down below. Take care. Have a fantastic day. Hope to see you tomorrow. Bye-bye.